Hello everyone, welcome to yet another weekly analysis. Now, for this week, we're focusing still on the dollar. Last week we recorded the video on Euro USD. We were looking bearish. The dollar is looking bullish. It is very important. Like I said before, it's very important for you to trade what you see and not what you think. It is easy for the markets to beguile you in such a way that you then think, oh, your support and resistance moves the market. No, 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 no. Market structure moves the market, right? So for this week, just like last week, we were looking at Euro USD, and Euro USD has obviously, met our expectations. We executed the trade. We took out 2%, no, 3% from the market. Yes, 3% from the market. And for this week, I've also executed already, but I'm just making this video late, but I've also executed already. I'm looking at 2%. So for the month of January, we're looking at a projection of 5%. It's a very, very, very great way to start the year. It's what I'm saying to you. Really, really great way to start the year with 5%. That's not bad. So let's jump into the top analysis, right? So I said this before, right? Excuse me. Whenever it's a new month, you want to come to the monthly time frame to look at what the candle is saying, because that is a whole month. That's what I'm saying. One candle, that's a whole month, and that could tell a lot, right? But this time around, we are basically in a range. But the markets are going up and coming down, going up and coming down. Now I will show you what I mean by we're in a range. And it's very easy to trade the ranging market, especially if you are trading in the direction of the monthly time frame, right? On the monthly time frame, we come to look for the trend. We use one time frame from the overall direction, and then we go to the weekly time frame and the daily time frame to trade in that direction. It's as easy as ABC. There is no special signal or special, course or whatnot. You go on the monthly time frame, you look at the direction with market structure, and then you go to the weekly and the daily time frame to make sure you are trading in that direction. That's all that there is. There are a little bit of ins and outs, with trading, but this is basically it, right? There's no special treatment in the market, right? So first of all, we start with the dollar index. The dollar index is still bullish. Now, market structure says the moment we break this level right here, then we become bearish. That's what I'm saying. The moment we break this level right here, then we become bearish. Until then, we are still bullish. Anything that happens, until we break this structure right here, is called a mid-term reversal. That's what I'm saying to you. Just a pullback, right? Now, if you go higher, if you go to the daily time frame, so the 3 month time frame, right? Because this is the thing about trading, right? If you go on Bloomberg and you watch Bloomberg, right? I do watch Bloomberg. I see what they see. I pair my analysis with theirs, right? If you go on theirs, you would see that their charts, they have the monthly time frame, the daily time frame, the lowest time frame you will see on the Bloomberg chart is the daily time frame. That's just for the intraday trading, projections. That's all you see. You wouldn't see the 15 minutes, you wouldn't see the 30 minutes, you would see the 10 year, you will see the 6 months, you will see the 3 months. I'm telling you, it's something to you. So these things happen now. So if I take my Fibonacci from swing low to swing high, you will notice that on the 3 month, we are basically, in the Willis zone, if you want to call it that. So I take my Fibonacci, from zone to from there from swing low to swing high, right? So you see that we are already there. Something is we are already there. So we can expect that this area right here will cause a push up in the market, right, in the dollar. So, but like we said before, all of these things are hypothetical. It's not saying to you, they are theories. They are not, set to happen. But it is very important to have a plan, right? It's very important to have a plan when you come into the market, right? So you don't get punched in the face, right? It's very important to have a plan. So for the dollar, we are looking to keep on buying solely because we are bullish on the monthly time frame, and on the daily time frame, we are now bullish again. That's what I'm saying to you. At first, we were bearish for a while, but on the daily time frame, we are bullish again. These are the reasons why I am executing Euro USD. We haven't even gone to the Euro USD yet. I'm just trying to show you my thought process into the dollar, right? Now, we were bearish for a while, right? We double top right here, we were bearish and we kept falling and we kept falling. Now, the moment we formed a double bottom here and broke the neckline, I started looking for buys. I look for buys around here, and now I'm looking for buys around here again. Now on the Euro USD, right? This the Euro USD is basically dollar index turned upside down. So whatever I'm thinking about in the dollar index, I'm going to think about in the Euro USD, right? So on Euro USD, right? I'm going to show you what I mean by we're in the range. It's easy to trade in ranging market, but it is very, very important for you to trade in ranging market in the direction of the monthly time frame. Listen, I keep saying this. I've said this like 4 or 5 times already in this video. If you are not trading in the direction of the monthly time frame, I don't know what you're doing. Now you may be making money, but you are going to also lose trades. It's something. But in this way, you're able to pick your trades. You're able to, take 2 trades a month and then make 5%, just like I am. That's what I'm saying to you. And it takes a lot of patience and it takes the grace of God to be able to do that. I know what I'm saying because it's basically suited to me. That's what I'm saying to you. So I'm not going to tell you otherwise. I'm not going to show you what I don't, what I'm not doing. I'm not going to tell you what I don't. I'm not going to show you what I'm not doing. I'm not going to give you what I don't have. It's what I'm saying to you. So this is what I'm trying to say, right? The USD is in a range, right? So it's come up into this level and then it's come down into this level twice. But we've come into this level 3 times. The last time we came in here, we fell and then double bottom, then it went up. I didn't buy because why? We are bearish on the monthly time frame, so I didn't buy. But now we are bearish on since we are bearish on the daily time frame, and I then see that we are in a range like so. I am confident to sell. That's what I'm saying to you. I'm confident to sell into this level and then see what the market does. If the market keeps on falling, I will then keep on selling. Okay, I will then keep on shorting the market from here. So we break and a retest and continuation, right? But until then, this level right here will be the overall take profit for this range. You see what I'm saying to you? So I don't get caught in the mix, right? Now on the daily time frame, because obviously we cannot trade on the weekly time frame, we cannot trade on the monthly time frame. So we have to come to the daily time frame to see what the trend is saying, right? To see what the trend is saying. And the daily time frame is saying the trend is very, very bearish. It's something to meaning we formed a double top around here, we're dropping to the downside. Same thing happened. We formed the reversal pattern head and shoulder around here again, and we drop to the downside. So we can, obviously anticipate and plan and structure our trading and our risk on towards such, things that are happening, towards such history that are happening in the market, right? Because with trading, you can only make money off of what you've seen, what have happened in the market. A wise man once said, you can only judge a man by his previous actions, right? So also you can only execute or judge a trade by its previous actions. So I'm saying to you. So for the Euro USD, I've executed already. You know, I executed off of a bearish engulfing on the 1 hour time frame, right? On the 1 hour time frame, I executed off a bearish engulfing right here. I made money from here. I took out 3% in the market from around here and all the way here, and I got out strategically because I had got into my take profit one. And this is how I got my take profit one, right? So this is it, right? If the market, like I said, I see. Remember what I said when I said you can only predict what's gonna happen by the history right now. If I'm going to predict what's going to happen by the history, I should be able to also use what had happened, in the previous structure level to predict the next level. And if you take this here, you will notice that the moment the market touched this, this take profit one right here, right? That was when we started having all this commotion to the upside. And this is how I trade. This is how I get out of the markets before I get stopped at, before I get caught, and before I give back the markets what I've already won, right? Very important. Never give back to the market what you've already won. Never, never ever do that, right? It's a cardinal sin when it comes to trading. You get me? So for the Euro USD, if you've missed it, I don't think you've missed it yet. For now, you could wait for a break of this neckline, this double top right here. You could wait for a break of the neckline and then sell stops come above, right? And then take profit one should be around here, right? So this is my thought process. I executed this trade around 3 a.m. I reckon. Yeah, I got in this trade around 3 a.m. Right, sorry, 2 a.m. You can see the time right here. So I got in around 2 a.m. So I was awake and I got in around 2 a.m. And then it almost took me out, but my stops are above here. My stops are strategically placed, right? And I thank God for that. And then it looks like it's about to form a double bottom, or rather, sorry, a double top, and then a break of the neckline will then initiate a very, very strong reversal pattern. And that's what we're expecting to happen. By the grace of God, it does that, and then I'll keep holding, and then I'll get out I'll take out, I'll close majority, or I'll close everything when we get here. If that doesn't happen and it takes us out for a loss, fine. That's what I'm saying to you. It's fine. We'll strategize and then we'll plan again and then we'll go again. So this is my thought process for USD. Have a great week. Trade wisely. Be risk on. You should not be risk off no matter what it is, even though it's a bank holiday. Always be risk on. That's what I'm saying to you. Meaning be prepared to execute even when you see your setup. Do not wait for bank holidays or none of that. On Christmas Day, on Christmas, in December alone, I made 5%. For something to in December alone, I made 5%. And people were busy eating chicken. I was busy training. So have a good week. Ciao, ciao.